Today, I want to share with you guys how I knew, quote unquote, Micron would double. I did a video yesterday sharing how I doubled my investment in Micron and how that was my goal because I had earmarked that that stock would double. One of the members in the 50K club asked me, how did I know that? What's the work that I did to come to that conclusion? So I thought I would share all that with you today. And of course, not financial advice. Don't copy us strangers on the internet. This is just for educational purposes only. But I want to get one thing straight. I didn't actually know it would double, right? If we're being completely honest, when people say things like, this stock will double, it's going to the moon, blah, blah, blah. If that's true, and the person saying it really deeply knows, for me anyway, this is how I look at it. If I knew, I'd have sold off every single thing that I own and I would have gone all in on the highest leverage opportunity, that is buying calls, right? I wouldn't have just allocated a portion of my account to buying shares because if I knew for 100% certain, why wouldn't I do that? In trading, all we're doing is stacking the odds in our favor. We can't possibly know until we're looking back, right? So today, it's all about how are we stacking the odds in our favor? What are we looking for? So here's the research that I did, and I'll cover off each of these points with you today. Number one, what's the strength in the overall sector? Number two, company valuations. Number three, projected earnings. And number four, competitors' moves. Let's start with sector strength. So it's literally just ears to the ground, listening to what is being said, not opinions on random YouTubers that are just, I think this thing's going to double, but what are reliable sources who are in the space actually saying? Things like, is there a shortage or an oversupply? Well, for memory, there was absolutely a shortage. Is demand increasing or decreasing? For memory, it was increasing. Are prices increasing, decreasing? Again, memory, it was all increasing. And this one here, are all companies within the sector experiencing the same growth and or decline? Because a sector movement and strength in a sector is very much everyone rises rather than just one rises. Because when one's rising, it's showing that a company is strong rather than the entire sector. So are all companies within the sector experiencing the same growth and or decline? And absolutely, that's what was happening when it come to memory. So tick for the sector. Next, valuations. I want to come into the chart and I want to talk you through how I find valuations, projected earnings, and competitors' moves. It is so much easier than people make out. I promise you that. All right, so I'm just simply in TradingView and I've got my Micron chart up and I'm back at around the time that I was looking at, which was end of April, sort of mid to end of April. Now, what I was just talking about market research as well, like sector strength, in here you can literally just come into the news and start reading through some of these news reports as well. It'll give you an idea of what actually is happening. So I like to do that. But let's talk valuations. Valuations, in all honesty, I rarely look at unless I'm expecting that something is quite severely undervalued. In order to do that, all I'm doing is adding the indicator price to earnings ratio. That's it, right? And when I was looking through this period of time, we were valued at around sort of anywhere from at the lows of 15 up to about 21-ish. And that was post this earnings here, where we'd reached $12.20 per share. So if we come over to our little graph here, that was here, $12.20 per share. We had projected that the next earnings, we were going to be up at 20. So almost a doubling from what we estimated here, 9, or actually it is a doubling, estimated on this quarter, 9.19. Estimate of next quarter, 20. So I'm like, if we can double our earnings, surely that means we can double our stock value as long as we're not already overpriced. So this here at 20, between 15 and 20, that told me that we are absolutely not overvalued. That's a very low valuation. Number one, compared to where we've been in the past, right? But number two, compared to AI stocks in general. The other thing I looked at is what happened between this earnings and this earnings as far as stock value goes. So what did we actually do? We went from an earnings of actual earnings, 4.78 per share, up to 12.20. So we had a massive jump in actual earnings. And we went from, if we measure the move from this earnings date up to this earnings date, we almost doubled. We moved 93%, right? And in that move, it still left us valued lower than what we were before we even got this first earnings move. So I was like, this thing's got to be undervalued. And if we reach this estimated target of $20 per share, all of a sudden, this 21 valuation drops to like 10. That seems really cheap. So this exponential growth of earnings per share was making the valuation seem so low. The next thing, because I was like, we haven't broken out yet. So we were hanging out sort of through here, right? We hadn't broken, I don't like red lines. Let's make it blue. We hadn't broken out from this sort of $450-ish level. So that was, we were still around this 450 mark. Let me kind of zoom in here. We were still around this same sort of level, if we look at the dates down the bottom, on Tuesday, the 21st of April. So I'm doing my research on this stock and I'm like, I think I like you. Then I go and look at what are the competitors doing in this space. So who do we know to be the biggest competitor in the memory space in the US market? SanDisk. What's SanDisk doing at those same dates? April 21, it's all the way up here. So what had SanDisk already done? It broke out from these lows to April 21. It had had a 40% move already. And Micron, in those same dates, had done nothing. So I took that as my indication of this move has yet to happen. And I sort of felt like it was inevitable that we would get this breakout. And actually, one other thing I do want to show you is if we come into the forecasts, just to get an idea of what analysts are actually predicting, right? And at the time, everyone's prediction was well above current trading price. There's this one at the moment down here at 470. I wouldn't be surprised if that's just an old forecast that hasn't been updated. Checking everything's strong buy or buy, nothing is pointing to neutral or below. That to me is a good signal. And all of these forecast earnings per share, I mean, at the end of 2025, we'd reported $8.29 worth of earnings per share. 2026, we're estimating that we get up to 73 for the year. 27 up to 152. So this thing has huge potential in it, right? So I'm looking at all of this, and it again is just highlighting my thesis on this has got room to run. And ultimately, that's how I come up with my $900 price target. So I entered at around on the breakout day. So it was I don't know, what was the low of that day? 458. So maybe I was in at like 460 or something. And I set my price target at 900. And I literally just set the trade and let it happen. Now, sure, I could have gone from 900 all the way up to 1200, but I was happy to double my money. That was a good trade to me. And like I said in the previous video, I then took some of the profits and put them into Dram Leaps, right? And Dram Leaps, I exited up here. I've still got some more. So that's how I figured it out. And it doesn't have to be tricky. It really is a matter of where's the sector going? Where are all of the companies within that sector going? Have they run? Have they not run? This one looks like a lagger. And now I'm still looking at it. So someone else asked me literally just before about DRAM. Are you still bullish on DRAM? Right? And if we look at, so Micron is in DRAM, of course. If we look at, well, what's our next projected earnings? We're projected to go from 25 per share up to 31. And still, our valuation is still down here at 22. So this stock within the DRAM ETF still to me seems like it's got an awful lot of room to run. If we come and look at DRAM, and if we come just up the top here, I like to just look at each, let me move me. I can go over there for now. Just at the top here, I like to just then play around, click on this, play around with the holdings, find what's in the ETF you're trading, right? So what's mostly held? SK Hynix, Samsung, and then SanDisk, Western Digital, Seagate, Micron's a small percentage. I actually feel like they've recently increased their holdings in Micron, but either way, you've got an idea of the companies that are in here, right? So let's see what SK Hynix looks like, because this is their largest. Right, what do earnings look like? Oh gosh, we projected here 38. We are estimating our next quarter at 68. So again, this is like growth on growth on growth on growth. Now, sure, we're seeing what could be called a little bit of weakness through here, but this is to be expected. To me, this is very much we're just digesting the move rather than we're about to collapse, right? Let's be real. Even if we get up to these earnings, up to this estimate of 68 and don't overshoot, if we only get there, that drops this 20 times earnings down to, without properly doing the math, probably like 15. That's pretty cheap, right? So their earnings are coming up the 22nd of July soon. So this to me still looks super, super bullish. The chart still looks fine. You know, we're holding off of this 50 EMA. Sure, we haven't broken out of the 20 yet, but there's no good fundamental reason why these stocks should fail right now. Samsung, same deal. Look at Samsung's earnings from $3 to $6, and now we're projecting more than double, right? We're projecting from double, from 6 to 12, basically. So if we double earnings between this point and this point, and we're currently only trading at a 22 earnings per share, then what happens? All of a sudden, we're at a cheaper valuation because we're at the same price, assuming the price remains steady. We're at the same price, but we've now just doubled what each share is earning. So to me, everything still in this DRAM sector, SanDisk, looks good. Now, SanDisk is the only one that you could probably argue had a huge run up and is overvalued compared to others, right? But still, earnings per share is projected to once again almost double. So, yes, it looks expensive today, but if we continue to double earnings, it's not expensive relative to earnings. And earnings again start coming up real soon, start of August. I want to share the flip side of something like Palantir. Palantir got ridiculous. I don't have any other word for it, right? So Palantir's growth was huge. If we come down here and we bring in year on year, its growth year on year was substantial, but not to the point where our valuation reflected its sustainability. So it's kind of no surprise that Palantir has gone from its highs of 200 down to these 120 levels, and we're still trading at a huge valuation, right? So when people talk about, oh, aren't memory stocks starting to get overvalued? If we were doing this, I'd be like, absolutely. Like, it might be worthwhile trimming some DRAM or cutting DRAM out of your portfolio because this is looking like it can't be sustainable. But when you've got earnings per share that are still literally sitting in the 20s with the projection to close to continue to double, and what happens, so the other sort of narrative, if you will, is people then talk about, okay, well, what happens when memory prices start to fall or when the demand is less? We're not, I don't believe anyway, this is my opinion, we're not growing our valuation, our PE ratio, at a rate that would have outpaced the drop in earnings. If earnings per share drops, then this is still a very healthy earnings per share valuation, right? This is not an overvalued business by any means, in my opinion. So that's why I continue to buy DRAM, why I continue to trade DRAM, why I still have it in all of my portfolios, and why I don't think that it's anywhere near done. I think DRAM has so much room to run still. So my thoughts, my kind of research methods as well. So I hope you found that helpful on just sort of how I look at things and what I look at. It's helped me to find many stocks that have been somewhat underperforming in the sector. So I like to look for, basically exactly that. What's running? What hasn't run in that sector yet? And let's go and put some money in the one that's not run yet. And remember, no one knows. No one knows. So whenever anyone's telling you to go all in on this stock, this one's going to double, this one's going to triple, this one's 10x, just know that they don't know. But they're doing, well, I can only talk for me. I'm doing the work to at least stack the odds in my favor. And that's what I recommend you do. I recommend that you don't listen to the noise of what is YouTube. I recommend that you come up with a way that you can start identifying these kinds of trades for yourself. So I hope that was helpful. We are coming up to another trading week. I hope you all have a wonderful week trading. If you're not yet in the 50K club, the link is in the description. Come join us. We're going to have a lot of fun trading in there this week, and I would love to see you there.